Toronto real estate market likely to hit the bottom in spring 2023. It is spring 2023. This is all according to RBC. So what is actually going to happen? Is the bottom here or we're coming up to it? Stay tuned to find out. Now, if you're looking for some help on how to navigate the real estate market because you're a little bit confused, because there's a lot of headlines being thrown at you, there's a lot of data being put out there, we can break it all down for you in your personal specific situation. And you can do that by booking a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name's Zen, and I run and operate a RE/MAX in the Greater Toronto Area on top of making awesome real estate content just like this for you. And if you are enjoying the content, make sure you smash the like button and subscribe to the Prime Properties channel so that we can get more of that information out there to all of you. And, gives me a little bit of feedback and a little pat on the back saying, hey, Zen, you're doing a good job. So today we're going to actually look at a report that I was going to talk about a week ago, but there's been so many things that have been happening with like banking collapse, Bank of Canada interest rate hikes, the crazy stats that just came out year over year. But yeah, so finally getting like a little breath of fresh air to, talk about this report. So RBC actually puts out a lot of these reports very often about the housing market and where it's going to go. And, as the biggest bank in Canada, we should put a little bit of weight to it, right? So I'm just going to review and give you my thoughts on what's happening. So I've highlighted some of the points I'm going to kind of talk over for you, but basically they're saying that right now it's the housing market is slowly correcting and it ran up and it's slowly letting off steam on how much the prices are going down. And you can see basically right here, they actually think that it will hit the bottom sometime this spring. Now, keep in mind, this data and everything is related to all of Canada as a whole. So from peak to trough, we're down like 18% from basically last year because we talked about numbers last week, right? And right now they're saying that they're calling for 18% peak to trough, but they are using kind of like a different metric in measuring this, right? So I'm using an MLS metric. They're using something called the RPS. So it's a little bit off, but right now they're saying that they're halfway through the peak to trough and 15%. Which means that they're saying that there's going to be another 7% nationally, all of Canada coming, that's going to happen. Assuming that the Bank of Canada is done raising rates. So we had the rate pause last week already. The next one is coming in April. And, given what has happened with the bank collapses, we'll see if there's anything that happens. I still think there's going to be a rate pause, right? It's going to continue the way it is. That's why if we take that into account and we look at this, RBC is basically saying that we'll probably see some more price drops, but then it will bottom sometime in spring. So my definition, spring could be March, April, May. And at the moment right now in the spring market, it is kind of heating up. Again, nowhere near to the level of like February 2023 numbers. Now, here's the thing that they were looking at. So they're saying that in long term, the booming immigration will fuel demand through the medium term, right? And possibly beyond that, and raising the rate odds of deep supply shortage in the future if home building fails to pick up materially. So we talked about this before. We're not building enough homes. There's tons of people coming in, and this is a long-term problem. At the moment, we have a short-term affordability crisis because of higher interest rates. So a lot of people will think that interest rates are going to continue going up. Some may continue going down. I would say most people think it's going down, given that everyone's getting a short-term fixed mortgage right now. So a lot of people are, I would include myself, are bullish real estate long-term in Toronto, but short-term, you just got to watch out for kind of the potholes that you could be tripping over because of the higher rates. Now you can kind of see right now here, they're saying that in this little chart, the amount of homes that we're seeing right now on comparison is at one of the all-time lows. Outside the pandemic dip over here, we'd have to basically go back all the way into the great financial crisis to see the amount of sales this low. And I've talked about this before. We have like 23-year low sales, and it should realistically just go up from here. Now that's not from what prices are, but that's just what like the number of sales are going. And again, they're saying that they believe it will bottom in a couple of months. So here's kind of like my point in all of this. They're strictly talking about Canada here. So I've always been saying that we need to watch the type of inventory we're getting in March and spring market, right? And spring market like realistically starts, a lot of inventory comes after March break. So currently right now it is March break. So next week, Monday, Tuesday, Wednesday, things should be getting better. But at the moment, they're not that great. Like inventory increased about like 10% and then flatlined in the last 2 weeks. You can check that chart out here. So it's not like increasing in an amount that is gonna call it quench the amount of demand that we have, especially for low rise homes. So it's not looking great. So now if I were to kind of look at the information over here on the current, like call it first 10 to 12 days in March relative to February, it's also not looking the best, right? So I was saying from January to February, we saw an increase, and that's a seasonal bump. Normally in March, we should sometimes see a minor increase or it flat lines, right? Now, of course, this is based on inventory. And again, this will still shape up in the latter half of March. But at the beginning of March, you can basically see right now, we are on track to do more sales, which is normal, which is totally normal, right? So we ended at 4,800 in February, and then we're at like 1,800 right now. I say we're probably gonna come in close to like 5 to 6,000. Now, the thing that I would look at is the median price, which is 950 and 990. I generally don't like to look at median price, but at the moment right now, I will use it because there's been a lot of like $2 million homes that are selling. And the fact that this is moving up tells me that prices are going up because price of the middle property in the middle is moving towards the right, getting more and more expensive, which means that generally it's skewing everything over. And you can also see that the average price went from 1.1 million, now it's to 1.1 million 50. That's a pretty sizable increase. It really is. And then the problem that I'm looking at all of this is we hit 100% sales to list ratio, meaning most properties are selling like a tiny smidgen on average over their list price. Now we're at 102%. That's a really big move in a few days. It really is. And then when you look at the average days on market, we're getting down into single digits right now, the median one. And what this tells me is that if half of the properties are selling less than 90 days, we are seeing offer presentations, which are generally like they get sold in 7, 8, 9, 10 days, or there's stuff that's actually going in bullies. If we see the median days on market go down below like 5 or 6, that's basically where we were in February 2022, where things were going in bully offers. At the moment, we're seeing multiple offers right now, and you can see that 44% roughly of properties are being sold over ask relative to 36. So you can see we are picking up traction in the first 10 days. Now it's because of the chart I showed you previously, which is we're not getting enough listings coming to market. So I'll watch next week and I'll keep you guys updated as to how much inventory we get in March, but it's not looking good right now. It is not looking good. Now back to the report over here. This is a little bit outdated since, you know, the Silicon Valley Bank has collapsed, but they're basically saying that they weren't thinking that there were going to be more rate hikes. It would basically stay where they are. And here's a key thing. If there's any downward drift in the longer term bond market, which is RBC's call over the next year, is also likely to be viewed as a positive sign for a turnaround. This was before the bank collapsed. The bond market just took an 80 basis point dump this week. So is this going to change out their forecast? Absolutely. And this is why I'm saying like everyone's forecast is kind of like a game of probability, and it's always good to look at everyone's perspective and kind of when you get new input, they have to have new output. And right now, because of so many things happening right now, we're going to have a new output. Now, the final few things I'm going to point out from this report over here is basically saying that RBC still believes that there's solid market fundamentals despite all of this, okay? So when we talk about fundamentals, I'm going to be more talking about medium term, long term. They're just basically saying that inventories are still historically low right now. And like I was saying in the previous chart, they're increasing on a like week to week, boots on the ground level, 10%, which is not very much. It's going to cause some kind of like, you know, housing shortage in the future. But they believe that after 2024, once the market has adjusted to high interest rates, it will rebound. I am of the belief right now that the market has already adjusted to the interest rates. I saw an uptick in showing activity once the Bank of Canada announced that they were going to pause. And we saw in like the first week, second week of February, activity really started picking up. Multiple offers started coming back on the low-rise homes. That's kind of why I say adjustment. And I would attribute that to the fact that you could get a 5-year fix at like 4.8, 4.9 at the time. So people got rate hold for 90 days and they're good. Then the fixed rate mortgages went up a little bit, right? But then the Bank of Canada in March, like last week, announced that they're going to pause for the first time, right? So it's giving a lot of buyers confident who are about what the interest rates are going to be. So those who are sitting on the sidelines, they're jumping back in the market. The thing is, if things keep progressing the way they are looking right now, there's a very good chance that people are going to be more and more confident in what the interest rates are. They'll adjust to it, and then we're going to have more buyers jump into the market. The problem is, if next week or continuously in the spring market, we don't get enough inventory, we are going to have a problem. And this is why I've always been saying, March 2023 is going to be a very, very critical month on how the real estate market is going to look for the rest of 2023. And this whole bank collapse totally threw like a monkey wrench into all of this. So, you know, there's a lot more things in motion than what it already is, right? And the final thing I'll put here is that RBC estimates that their housing stock must expand by 270 units per year by 2023 just to accommodate the growth in households, let alone addressing the housing affordability crisis of many Canadian cities. So that's their estimate. We've used other people's charts and seeing what the estimate was, how the Ontario has to build 1.5 million homes. We're basically building half of what we need for the projection. And in their estimates, they're probably not including the temporary housing that we need for temporary workers and international students. So right now, even the bearish of people, they could look at this and say, look, there may be some more short-term pain, which is perfectly fine, right? But they are optimistic in 2024. So have we hit the bottom of the spring market? We'll have to see. But if February went up, March went up, we may have already saw the bottom again. I hate saying this, but there's a very good chance that if confidence continues building because of all the economic reasons and the confidence in the interest rate and the adjustment of the interest rate, the bottom would have been in January, November. Again, I've been saying this for 6 to 9 months. 1 month does not make a trend, but a trend does start with 1 month. And right now, the trends are looking like it's pointing up. There's stimulation in the market. Buyers are coming back out. We really have to see how many sellers are coming to sell their property. That is what's going to dictate where prices go. Hopefully you found this helpful. And if you are looking for some help on how to navigate this real estate market, you could book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.